Hello, everyone, and a huge warm welcome to all of you tuning in today.
Yeah, hello.
We are so grateful you've decided to spend some of your valuable time with us to watch and listen as we unpack the machinery that, keeps the digital world spinning.
It's great to be here.
If you are looking to get smarter on the infrastructure that powers your daily life, well, you are in the right place.
And honestly, today is a treat because we're looking at the absolute bedrock of the internet. We're analyzing the fourth quarter and full year 2025 earnings call for VeriSign,
Ah, VeriSign.
which just wrapped up on February 6, 2026.
It's one of those names that sounds incredibly official, almost bureaucratic,
Yeah,
but for good reason, right?
exactly. These are the folks running the registry for .com and .net. They're the map makers.
Set makers, I like that.
When you type in a URL ending in .com, VeriSign is the entity ensuring that request actually goes to the right server. Without them, the internet as we know it just doesn't function. And this call was fascinating because it wasn't just about revenue. It was a window into how the internet is physically adapting to the age of AI.
Okay, so per our usual tradition, let's break this down systematically. We're going to start with what the company actually presented, the hard numbers, the strategic updates, before we get into the Q&A.
Right, where the analysts try to poke holes in the story.
Exactly. So CEO Jim Bezos kicked things off, and he started with a number that is, frankly, hard to believe.
It's the statistic that defines their whole business. He announced that VeriSign has extended its record of 100% service delivery for .com and .net to 28 consecutive years.
28 years.
28.
That covers the dot-com bubble, the financial crisis, the rise of mobile, social media, pandemics, everything.
And the system hasn't blinked once. Not once.
That reliability is their product.
It is, and clearly the market still values it. Bezos highlighted that they ended 2025 with a domain base of 173.5 million names across .com and .net.
And that's an increase, right?
Yep, an increase of 4.5 million names, or roughly 2.6% growth over the year.
And it feels like 2025 was a bit of a comeback year for the domain industry, wasn't it?
It really was. The most telling metric is new registrations. In 2025, they saw 41.7 million new domain registrations.
Wow.
That is the highest number they've seen since 2021.
And what about just the last quarter?
Just in Q4, they did 10.7 million new registrations, which is a significant jump from the 9.5 million they did the year before.
And was this just a U.S. phenomenon, or is the whole world buying websites again?
No, it's global. They reported growth trends across the U.S., EMEA, and the Asia-Pacific regions, so the appetite for digital real estate is healthy, worldwide.
Okay, let's talk about the bank account. CFO John Callis walked us through the financials.
He did.
Since VeriSign is essentially a software monopoly with high margins, I assume the numbers were good.
Oh, they were very strong. Full-year revenue for 2025 hit $1.66 billion, up 6.4%.
Okay.
But the efficiency story is even better. Their earnings per share, or EPS, grew by 10.1% to $8.81.
So earnings are growing faster than revenue.
Much faster. And that tells you the business is just incredibly scalable.
And they're famous for not hoarding that cash, right?
Correct. Extremely disciplined about returning capital. In 2025 alone, they returned $1.1 billion to shareholders through share buybacks and dividends.
$1 billion.
They even declared a new cash dividend of 81 cents per share, which is a 5.2% increase. They're basically a machine that prints cash and just hands it back to investors.
Now, looking forward to 2026, they gave us some guidance. What are they expecting?
They're projecting revenue between $1.715 billion and $1.735 billion, operating income landing between $1.16 billion and $1.18 billion.
And what about the domain base itself?
They expect it to keep growing, somewhere between 1.5% and 3.5%.
But there was one line item in the guidance that made me pause. They said they're going to spend more money next year on equipment. Why?
This is where the AI reality hits home. They expect capital expenditures, CapEx, to rise to between $55 million and $65 million. The CFO explicitly stated this is due to replacing old equipment, yes, but also because costs are higher due to intense demand from the AI industry. It's causing supply constraints.
That is wild. So because OpenAI and Google are buying every server on the planet, it's actually getting more expensive for the phone book of the internet to buy gear.
Exactly. The supply chain for data center hardware is squeezed tight. It's a tangible example of how the AI boom just ripples through the entire tech stack.
And before we move to the Q&A, did the CEO drop any hints about the future? Any new products?
He did drop a teaser. He mentioned they're working on potential new services focused on reducing vulnerabilities and improving information trust.
Information trust. Sounds like a buzzword we should keep an eye on.
He didn't give details, but promised more would be shared in the coming months.
All right, let's move to the most interesting part of the call, the Q&A session.
Yeah, this is where we really get into it.
This is where the analysts really tried to figure out if AI is a friend or a foe to the domain name. The first question came from Rob Oliver from Baird, and he went straight for the big topic.
Oh, yeah. Ryan basically asked for a status update on AI's impact. Is AI driving this resurgence in registrations? And he also asked for some details on the marketing programs they ran in 2024.
I loved the company's response here because CEO Jim Bidzos didn't just give a generic answer. He had a specific thesis about something called agentic AI.
He did, and this is crucial. Bidzos confirmed that AI is a significant driver of their growth. He mentioned that registrars, the companies like GoDaddy, are using AI tools to make it easier for people to build sites.
So it lowers the barrier to entry.
Exactly. But his point about agentic AI was, I thought, profound.
Break that down for us.
He argued that as we move toward AI agents, bots that actually perform tasks for you, like booking travel or buying goods, those agents will need to navigate the internet reliably.
To find fresh data.
Right. To do that, they can't rely on hallucinations or guesses. They need the DNS. They need the governance and structure of .com and .net to ensure they're at the correct destination.
That is such a fascinating pivot. So in a world of synthetic content, the domain name becomes the source of truth.
The map coordinates for the robots.
Exactly.
So he views AI not as a replacement for the web, but as a heavy, heavy user of the web structure.
And what about the marketing?
Oh, right. On the marketing side, he said their success came from offering a basket of programs to registrars, giving them flexibility rather than a one-size-fits-all approach.
Makes sense.
Yeah.
But Rob Oliver from Baird wasn't done, though. He had a follow-up.
He did. He wanted to dig into that teaser about the new services.
Right. He asked for more color on those.
And he pointed out that VeriSign famously sold off its security businesses back in 2015 to focus on being a pure registry. So he was essentially asking, are you guys drifting? Are you trying to be a security vendor again?
A very valid concern. Investors like focus. So how did the company respond?
Jim Bidzos was very clear. He said VeriSign is staying in its wheelhouse. They are not becoming a general sales organization. However, he explained that because they constantly do R&D to keep the internet stable, they discover small enhancements, better locks for the doors, so to speak.
So they figure if we built this to protect ourselves, maybe our customers want it too.
That's it exactly. He framed it as commercializing stability and security enhancements through their channel, driven by the increased dependence on the internet. He promised more details in a few months.
Next up, we had a question from James Michael Sherman Lewis from Citi. He wanted to get into the math of the guidance.
Yes. James asked to unpack the assumptions behind that 2026 domain growth guidance of 1.5% to 3.5%.
That's what drives the low end versus the high end. It's the classic, how confident are you question.
Exactly. And the CFO, John Callis, he played it very straight. He said the guidance is based on the trends they've seen over the last year, where all major regions, US, EMEA, APAC, showed growth.
So it's not a guess.
No, not at all. He emphasized that they have regular meetings with the registrar channel to understand their plans. The range simply encompasses the most likely outcomes based on current momentum. It's data-driven.
James from Citi also had a follow-up, and this one was about the landscape of the internet actually changing.
Right. He asked about the upcoming ICANN round for new generic top-level domains, or GTLDs.
So all the new extensions.
Exactly. ICANN is opening applications in April, meaning we could see a flood of new extensions like .shop, .bank, or whatever. He wanted to know VeriSign's approach.
Are they going to go on a shopping spree and buy up new extensions?
Bidzos was cautious. He said they are studying the round, but he gave a very specific criterion. They would only be an interested party if an opportunity contributes to their strategic role as a critical infrastructure provider.
So they aren't going to buy pizza just for fun?
No. They're looking for strategic value. He also noted that transparency is coming. All applications will become public shortly after the round opens in April.
So we'll know their moves soon.
Very soon.
Moving on, we had Alexei Gogolev from JP Morgan. He wanted to split hairs a bit regarding the difference between .com and .net.
Yes. Alexei asked for a breakdown of growth specifically for .com versus .net. Usually, VeriSign just guides to the combined total.
And there is a difference in performance, right?
There is. The executives admitted that while .com is strong, .net has seen a slight decrease recently. They have programs in place to target retention, but it's clearly the secondary asset.
Got it.
But Alexei's question triggered a really important technical explanation about renewal rates.
The mix issue. Can you explain that?
Yeah. The company explained that 2026 will have a higher mix of first-time renewals. Because they had that massive surge of new registrations in 2025, millions of domains are having their first birthday in 2026.
And first-time renewals are less sticky.
Much less. They historically drop off at a higher rate than domains people have owned for 10 years.
That makes total sense. If I buy a domain for a project and never use it, I drop it after year 1. If I've kept it for a decade, I'm keeping it forever.
Exactly. So the overall renewal rate percentage might look lower in 2026, but it's just because the customer base is fresher, not because the business is unhealthy.
Finally, Alexei Gogolev from JP Morgan asked the question that hits everyone's wallet.
The price hike.
The inevitable question. He asked if a decision has been made to raise .com prices this year and when it might be announced.
And VeriSign has a government contract that limits this, correct?
They do. Bidzos explain the terms clearly. VeriSign has the right to raise prices by 7% in the back 4 years of each 6-year contract period.
And we are entering that window.
So when would this happen?
The first available increase in this cycle would be late October 2026. However, the contract requires them to give 6 months' notice.
Doing the math, that means April.
Correct. If they choose to execute the price increase, the announcement would have to happen in April.
And what did he say?
He stuck to policy, said they do not guide to pricing decisions in advance, but he effectively told everyone to watch the news in April.
April is shaping up to be a massive month for them. New TLD applications, potential price hike, new services revealed.
It will be a pivotal month, for sure.
So we've heard the presentation and the Q&A. Let's try to wrap this up with a high-level view. What are the main themes we should walk away with?
I think there are 4 key pillars here. First, stability and trust. That 28-year uptime record is not just a vanity metric. It is the core of their business model.
It's the anchor.
It is the anchor of the internet. Second, AI integration. They are successfully reframing AI from a threat into a tailwind. They see a future where AI agents require reliable navigation.
And current AI tools are helping generate new registrations.
Exactly. Third, financial discipline. This is a company that grows revenue, grows earnings, and returns over $1 billion to shareholders a year. It's a well-oiled machine.
Right. And the last one.
And finally, the future outlook. They're cautious but positive for 2026, with major catalysts looming in April regarding pricing and new services.
It really paints a picture of a company that is quietly essential. It's not flashy, but if it stopped working, the world would stop working.
I think so.
And they seem to be betting that even in an AI future, structure and reliability will be more valuable than ever.
I think that's the perfect takeaway. In a world of synthetic noise, the domain name remains a verified signal.
Well, that brings us to the end of our analysis of VeriSign's Q4 2025 earnings. We want to thank you so much for watching and listening.
Absolutely. Thank you.
We know your time is valuable, and we really appreciate you spending it with us. If you found this breakdown helpful, please do us a huge favor. Click that like button, share this video with your colleagues who geek out on internet infrastructure.
And make sure to subscribe.
And make sure to subscribe to the channel so you don't miss our upcoming content. We've got some great deep dives planned.
Stay tuned.
See you next time.